Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, this is the video research from the ForexPeaceArmy.com dedicated to the Forex markets, particularly to the euro currency. And as usual, we will start our analysis from the daily time frame, and just to discuss what has happened during the previous trading session and what we can expect in during today's trading day. So yesterday we said that probably market should continue move to the downside due to the whole reasons that we have discussed almost during the week, and that we expect the reaching at least of that level is 128.94, because this is the minimum target of the weekly pattern, the downside. Well, yesterday our nearest target was that level, 130.58. Also was an agreement with the intraday 1618 extension of the ABCD move on the 4-hour time frame on the hourly chart. So you can see that market has hit it. Well, at the same time we said that we can't exclude the possibility of appearing this head and shoulders pattern. Since this looks like the left shoulder, the head stands at 127 extension of the left shoulder, so the market will find some support. That area was slightly lower. It in fact could form the right shoulder. Potentially it could happen, but taking in account of that move, such kind of price action, you can see that nasty bars to the downside, black candle, attempt to move higher, close at the low again and again. So that's not personally I do not expect, I hardly believe that it will happen. So I think that if market even will show some pullback here, it hardly will be the 618 retracement, and probably market will continue move to the downside right to the 618 target of our pattern on the weekly time frame. Well, but anyway, that is not very important for us. How deep this retracement will be, and will be this retracement at all or not. Because now we have the solid bearish context, we have the bearish trend on the daily time frame. This is a really nice move to the downside, and we have to use any pullback on the intraday charts to enter on the short side of the market with the target. It's around minimum target is around 129 area. It's right here. Speaking about the support levels, you can see that market has broken this 3.8 support from that low to that high. Okay, now it stands below it. Also, it moved below the weekly pivot support one. So this is lime dash line. Just slightly below the market is 129.70, 129.80 area. This is the 50% support of the whole swing to the upside. And take a look, that is the monthly pivot point, 129.83. It hasn't been traded yet by the market. So theoretically market could find some support here and could try to show some retracement, some pullback, some attempt to show the retracement to the upside. Who knows? This could happen. Well, to estimate that we need the intraday charts, and if market will form some reversal pattern on the hourly time frame, on the 4-hour time frame, then probably this could become the retracement to the upside. Well, this is a bit personal, because if you are a trader on the daily time frame, you probably will skip this retracement and will search for the possibility to enter on the short side of the market. Personally, I trade the weekly pattern, and I hardly will try to enter on the long side of the market on some intraday charts, taking into consideration the overall solidly bearish context. But if you're a scalper, if you're a trader on the 5-minute chart, on the hourly charts, so probably you could try to trade some upward trends on the intraday charts. This is not absolutely forbidden. This is just should be based on your trading plan and trading style. If you will act in according with it, so what's the problem? So you could trade in fact any patterns and any context that you have according to your trading plan. But I'm now speaking about those who trade on the daily time frame, and those who trade as me the weekly pattern, weekly bearish pattern. Now on the 4-hour time frame, what we have? take a look at that pattern that we have discussed right in the research during yesterday's research. That is stop grabber pattern. And we said that if market will form the stop grabber here, then it will tell us that we should enter on the short side of the market right from that area. If you remember, that was the confidence resistance on the 4-hour time frame yesterday, and also an agreement from the smaller ABCD pattern on the hourly time frame. It couldn't be seen here, but on the hourly time frame, if you remember, this was the ABC pattern, ABCD. So that was the stop grabber. What is the stop grabber? This is the failure attempt of the trend shifting. So when the market is trying to shift the trend on the other side, in this case, market trying to shift trend to the bullish. So you can see that inside of this period, trend could turn to the bullish side. Those traders who trade on the trend indicators very often takes the signals the attempt to enter on the long side of the market, but at the close of that period, market hasn't confirmed that. So it has held the trend on the bearish side. Those who entered on the long side of the market now become trapped in the wrong position. And where they place their stops? Usually below the previous swing lows, right here. So that's why the minimum target of this pattern is the taking out of the stops that has been placed below that, taking out of the low of the previous swing. So you can see here that market has plunged down, take out that low and turns to some retracement, and then continue move to the downside. So here was our minimum target. It's right here. This was 130.58, the trade support. Also that was in agreement with the ABCD pattern and the 618 target. Here I have drawn this extremely ultimate point is A starting point of right here. Although the real starting point on that pattern stands slightly lower, that we discussed also yesterday. But today I even take this A point as the ultimate of this ABCD pattern. You can see that market now has hit even this target, 130.13 is right here. So that is the levels to watch for as the potential resistances. If market will turn to some retracement to the upside, that particular level is very interesting. So take a look, that is the double confidence resistance. So two different confidence resistance stands in the relatively tight range, 131.14, 131.38 is right here. Also take a look at the trend indicator. The 4-hour time frame will hold bearish right until that area. So that's really significant area. It's also includes the major 3-8 resistance from the whole swing to the downside. Since market on the daily time frame stands not at oversold, and now it doesn't stand at solid support areas. So this retracement and pullback naturally should not be too deep. Well, that area is absolutely suitable for the potential retracement if it will happen on the 4-hour time frame. So currently I do not see any signs of the potential starting of the retracement. So just a continuation move. Yes, I see some support just below the market. Market has hit this 1618 extension target, but there is no patterns that could point on the potential retracement currently. On the hourly time frame, I just want to warn you about this thrust that probably some of you could treat as the significant thrust for the double repo pattern or something. Be careful, because take a look. In general, that thrust was okay till that moment. That retracement, that high, stands precisely at the 3-8 resistance of the whole swing to the downside. From that high to that low, that was the 3-8 retracement. It tells that during this retracement, some steam was come out, because market has hit significant area of resistance. For the thrusting move, and that is suitable for the double repo pattern, this is not welcome pattern, not welcome moment. Well, it's very preferable that price should stand below this green line, this 3x3 moving average, and should not show significant retracements. Well, some relief could come from the moment that market continue move to the downside, take out that low. So maybe this steam that was out during this retracement was added on by this move below this low. Some maybe more participants have entered on the short side of the market. But in general, this price action inside of this thrust makes overall this thrust, and as a context for the double repo pattern, is not very perfect. Well, probably it could be treated as the double repo lull, maybe a lookalike pattern, or maybe it will work if it will happen here. But that is the bit worrying moment. This is not very good for the thrust to the downside. So be careful with that. Even if you would like to trade this thrust by the maybe double ripple pattern that could form here or something, if it will happen at all, of course, then maybe use just the half of your normal trading lot for trading that environment, because this is really not very good for this thrusting move. So that's been said. In general, we have this solid bearish context with the minimum target is around 129, and I suggest that any retracement that could happen, if it will happen at all, we should use for the attempt to enter on the short side of the market, because now as all trends are bearish, daily trend, 4-hour time frame, hourly time frame trend, well, if retracement will happen, since just below the market stands some support area, then that level to watch for the potential sell signals and add on to the short positions with the target 129. Speaking about the head and shoulders pattern on the daily time frame, well, now it's difficult to say will it form or not, and I suspect that probably taking into account that price action, I suggest that the probability of the forming of the head and shoulders pattern is not so large currently, because this really solid move to the downside, well, probably. But this is not the crucial moment for us. In fact, if market will show the deeper retracement to the 132.06.04, that is the level where the right shoulder should finish somewhere right here, we could use also for add on to the continued move to the downside, because the target of this potential move is 129.